Greetings to all of you from wherever you are joining us from. We are very glad that you are able to join us today. And it's a very exciting day when we'll be looking at a subject that is so pertinent in terms of the way we manage grants. Uh, but let me say one or two things relating to how this is linked to the African Population and Health Research Center. APHRC vision is to transform lives in Africa through research. And for this to happen, good research should be undertaken to provide evidence for decision making. And the way we look at decision making is very broad. We don't just talk about policy. Yes, policy is one of the decisions that are made. It could be a new policy, an improved policy, or the operationalization of a policy that is there and has just been in the shelves and not operationalized. Research evidence also helps us to design programs, like when any person is coming up with programs, they will look at what has been written and base their program on this. So it will be now the design and also the implementation and improvement of programs. It can also tell us how to deliver service after you look at different ways of delivering service and you see suboptimality. Research can be able to bring out optimal ways of delivering service to the beneficiaries. Research can also help us in providing practical guidelines on how to do things, also tools and innovation. And very importantly, the areas that are highlighted by research are usually funded once people see this to be very pertinent. So research can lead to budget allocation. And of course, it will also lead to individual and community behavior. And so at APHRC, we seek to do very high quality research, and we have demonstrated that over 24 years of existence now. And but even with all those years we have been in operation, currently we are about 330 staff in two offices, one which is the head office in Nairobi and the West Africa Regional Office in Dakar. And we're implementing programs in 35 African countries. But with all that, our impact is quite small. And the only way to amplify the impact is for quality research to be done by more and more people in Africa. And for them to support decisions that directly impacts life. And it is this understanding that motivates us to have a key emphasis on building capacity of individuals and institutions to do quality research, which is used in decision making. And over the years, we have realized the great role the environment plays in research productivity. Actually, APHRC was set up to provide a conducive research environment where scholars could be as productive and as those who are in northern institutions. But it's not every other African institution where that environment is conducive. And so, like if you look at APHRC, people will come who have never raised funds, but by just being at APHRC, because of the enabling environment, they find themselves raising funds. In terms of research publications, our per capita productivity is quite high, simply because there is a vibrant research active environment. And this is what we seek to promote across Africa. And it is with this in mind that out of our 4 strategic objectives, one of them is to strengthen the research ecosystem in Africa and to contribute to the development of a blueprint for Africa's self-sufficiency in research and development. So the other 3 objectives, one is in research, generating evidence, and the other one is on policy engagement and communication, and the other one is on systems and processes that help deliver programmatic impact. So under this objective, where we are strengthening our research ecosystem in Africa, we address both the technical aspects of research and the research environment. And critical is the fact that most of the research done in Africa is externally funded because African philanthropy is still growing. It's quite weak. And what this means is that organizations, for them to be productive, have to be able to attract funds, and especially from the northern funders, because by and large, they contribute to more than 90% of the money that goes to fund research in Africa. And so one has to be able to write good grant proposals. But besides being able to write good proposals, the other critical aspects that affect funding is credibility. And this emanates from a track record in effectively managing donor funds. So this program that is hosting this webinar is addressing the credibility question. And the way we are doing it is through assessing the capacity of organizations in areas like grant management and governance, using a tool called the Good Financial Grant Practice. So organizations are able to do their self-assessment, and once they are able to cover all the gaps that are identified, they can be certified at 4 levels, beginning with bronze, silver, then gold, and then there's platinum. And to be able to cover many of the gaps that organizations have in terms of governance and systems and processes, we are providing training on some of the critical areas, and we are using the Virtual Learning Academy to be able to reach more people and for posterity. We are also supporting the participants further through technical assistance, and especially in relation to the GFGP assessment and dealing with the gaps that are identified. We also have a community of practice where participants are able to exchange ideas and learn from each other. The webinar series, where we are doing a webinar every month, is aimed at going deeper in some of the areas that have consistently scored poorly in due diligence and audits of projects. And looking at the approach that we are using, one would ask whether we are going to succeed. And I believe that we are going to succeed. I will use an example of another program that APHRC has run for more than 10 years. We started strengthening doctoral training in Africa in 2008. And this was rather new in the continent. But when we started, that program spread like bushfire. Other people came in and also started having similar programs. And through our initiative and many similar initiatives that came out later in the continent, we are now graduating many high quality PhDs in African universities. So even for this area of ecosystems, there are a number of initiatives that are ongoing, and soon we will see the capacity of African institutions to manage grants getting better, and for them being able to win big grants from the Global North funders, and also from the growing African philanthropy. It's still at its infancy, but as it grows, they will find many leading institutions in terms of grants management. So I've talked about the program generally, a little bit about APHRC. I'll take it back to Bernard, but in case Gift, who is the program coordinator, would want to add something, he could add. Back to you, Bernard, and thank you very much for this opportunity.
Okay, thank you so much, Joseph, for the very nice insights that you've given us. Gift, is there anything that you will want to add on?
Yes, thank you, Bernard. I think I just want to add just a few specifics about the program, basically about the numbers. Yeah, so we actually started the project around February, and we have had about 3 inception meetings in West Africa, East Africa, and South Africa. And in terms of enrollment, we have enrolled about 500 institutions for now, and mostly we have covered about 33 countries in Africa. And in terms of enrollment into the program, that is the courses, we have enrolled about 1,400 participants, and the number is still growing. And as of today, about 20 participants have completed all the 5 mandatory courses. So basically, we are doing very well in terms of course participation. You've seen a lot of participation in the portal, in the program. Yeah, so in terms of the commitment, hours of commitment is just 2 hours for each course. The time commitment is just 2 hours. You should be able to complete a course in 2 hours. So over to Bernard. I think those are the things that I wanted to add. Thank you very much.
Okay, thank you so much, Gift, for that. So I'm going to invite our speaker of the day, and our speaker is Nicholas Mulwa. Nicholas is a manager with over 15 years experience in non-profit organizations, and he has had a privilege of auditing a good number of NGOs at both institution and project implementation level. And his experience spans around audit of agencies, and most of these agencies are funded by USAID, SIDA, DANIDA, EU, among others. And he holds BBM accounting and is CPAK, and currently pursuing an MBA in leadership and management. So let's invite Nicholas by virtual claps as he takes the podium. Thank you and welcome, Nicholas.
Thank you. Thank you, Bernard, and good afternoon, good morning, and greetings to all of us attending from the various corners of the continent. I'm happy to be joining you for this session, and I do indeed look forward to the discussions that that we'll be having. I think I'll proceed and share my screen. You can confirm once it appears on your end. I think Bernard, you can confirm if
it's
my screen
appearing.
is visible.
Yeah,
Okay,
it's visible,
good.
Nicholas. Thank you.
Just put it on slideshow.
Okay.
Yes, Joseph, there we are.
Yeah.
So our discussion today is on effective financial record keeping, specific to grant accountability. And we'll be looking at those 8 broad areas. We'll be discussing those 8 broad areas. First, we'll be speaking to what we mean by record keeping. Then we'll be talking through activities that are involved in records management. Then we'll be speaking to the principles, objectives, and types and the life cycle of records or records that we do keep for financial purposes. Then we'll be speaking to financial records and the benefits that we derive or we're likely to derive out of keeping proper financial records as an organization. Then we'll be speaking to reasons why financial record keeping needs to be efficient, or what happens in case of inefficiencies in financial record keeping. And then we'll be speaking to consequences of that. And we'll be going in brief to discuss the common audit issues or challenges that we've noted as a result of poor record keeping. And then we'll finalize at looking at important steps and best practices in financial record keeping. So at an high level, what is record keeping or records management? So this is a textbook description. I think as we unpack the coming slides, we'll be able to appreciate more what this entails. But what record keeping is, from the definition of it, if you look at it academically, it's basically the creation, maintenance, and use and disposal of records, which has a goal of achieving an efficient and economical way, which should be done to achieve and ensure efficiency and economical use of resources of an organization. So a record can be an expense to the organization, or there is a cost to record keeping. I think we'll be speaking to that in the next slides. And there's also a life cycle attached to record keeping, as the definition speaks to. So we'll be looking at what that life cycle looks like, and at what level do you keep records, and at what level do you archive or destroy the records. I think, as Bernard had said, we can be posting questions to the chat. I think at the end we'll have an opportunity, if time allows, to take some questions where you'll be allowed to unmute and post questions. So what are the objectives of record keeping? The first one is on accountability, basically to be able to provide evidence and accountability of funds or resources that have been granted to us as organizations. Remember that most of us are working in the not-for-profit space, where someone has entrusted us with the resources to implement certain activities for projects that are identified are of interest to them. So record keeping, proper record keeping, allows us as an organization to be able to accountable and to transparently reference whatever activities we have in terms of we've undertaken in terms of now being able to support whatever expenditure we have undertaken. That is the accountability bit of it. Then for decision making, so proper record keeping allows us to, as organizations, to be able to make informed choices Then the next bit is on performance monitoring, that with proper record keeping, of course, we're able then to generate the financial records or the records that I think it's important I draw reference to two things. First is when we speak about records, we talk to records. I'm referencing to both the processed records that we have in our systems. So that would be the listings, the ledgers, the trial balances, the fund accountability statements, the income and expenditure statements, the balance sheets, and all other records that we maintain for grant reporting and monitoring purposes. And then that ties up to now the supporting documentation that gives rise to that information that we have in our systems. So in this case, we're talking to now the payment vouchers, the invoices, the attendance registers for meetings, the agreements, the contracts, and all the other information that feeds into the financial accounting process. So as we talk about, like in the first instance there, we speak about proof of transactions. So when we reference to proof of transactions, there I think we're talking to now that we've been given funds to facilitate seminars, conferences, or meetings for certain interest groups, then the evidence of attendance by the participants, the identified participants, will be now the proof of the transaction. That will be proof that the activity happened. And then further, we'll have the invoice from the conference facility or the space where the sessions were held as evidence of that expenditure having been incurred towards now delivering the activities or the outcomes that are outlined in our grant agreements or in our engagement with the particular donors. I thought I step back and bring in the context of how the proof of transactions and the financial records that sit in our systems or in our financial systems link up in terms of record keeping. Okay, going to the second part, so the supporting bit in terms of supporting decision making is organizations. I think we have to rely, or we do rely on record keeping in making decisions. And if we're not doing this, then we're failing or we're likely to fail. How this ties up to the choices we make as an organization. If you engage in a supplier or suppliers for certain activities, you'll need to have proper records in relation that probably these I can illustrate using the procurement process, where you'll need to have done your competitive bidding so that you can, as you make a choice of the provider to work with, that is based on a competitive process that is evidenced, and you can outline, you can clearly demonstrate how the choice has been arrived at, the capacity of the service provider, the capacity, the pricing, and also the other technical criteria that probably you'd need the suppliers to tick. In terms of performance monitoring, you'd need then to assess how you performed as an organization. In this case, these I can reference to now the large organization, where in record keeping, you've used your invoices, you've used your goods receipt notes from the customers, you've used your hotel invoices, the conference facility information. You've gone and generated your trial balance, your listings, and you've tied that up to the budgets given by the donor. So you're able to assess how your financial performance racks up against the budget and against the outcomes that have been outlined by your donors or by your financiers, so that then you monitor your performance against the set criteria. In terms of risk management, you do standard risk where you've engaged in transactions with funders and you're not able to support aspects of expenditure or any other transactions that are tied up to outcomes that are given by your financials. So the risk here is that there's one, a reputational risk, And again, there's a financial loss risk where you lose out on opportunities for funding, and you also risk litigation and other adverse measures being enforced against you by the other counterparties in engagements, for instance, donors and financiers. Then facilitation, the third objective is to facilitate efficient operations. So when you have set out an organization and you have efficient and detailed record keeping, you're able to then ensure streamlined operations in that you don't struggle in decision making, don't struggle in retrieving information, don't struggle in getting access to resources and information from your systems. So your operations become easier to manage. You don't need to spend the whole day trying to retrieve a file or a voucher or a support document, in that now you have proper systems where you can easily download a document from probably your shared drive or your cloud, if you have such resources. And then there's reduced cost of operations, in that now instead of spending or getting a resource to retrieve documents from an environment which is not properly organized, for instance, you need to retrieve a physical document, you have in place a system or mechanism which allows you to easily trace documents from your filing cabinets or from your cloud resources and make it available for whatever decision making you need the information for. The other aspect of facilitating efficient operation is preserving institutional memory. So with the proper record keeping, you'll achieve this objective by ensuring that in case there is transition within the organization, either in the persons in charge of certain roles or responsibilities within the organization, you're able to manage that process easily. Since you don't rely on one person, you'll create a space where anyone can easily step in and pick up where the activities were left and be able to execute or continue the programs. I think I've spoken to the next item in terms of ensuring legal and regulatory compliance. So with the record keeping, proper record keeping ensures that you achieve that objective, in that in case of any regulatory questions, you're able to furnish the regulators with the information they require, and that takes a step towards ensuring that you're able to support any questions that are raised. In terms of compliance also, you're able to support where you donors come questioning how the funds have been spent, or in case they call for an audit, you're able to provide whatever information and support that is required for that purpose. Then the last objective listed there is about protecting the information and assets. So where you engage in good or efficient record keeping, you realize that you're not exposed as an organization, in that you're able to take proper safeguards or proper measures to ensure that if it's information or data, it's only availed to the persons that are authorized to access it and to make use of it. And then in terms of assets, you're able to track and monitor your assets and make sure that it's only available to parties or users who've been authorized to make use of those assets. I think that is objectives. I think talking to the objectives, might have highlighted, gone into much more detail than I should have. So we'll tie up the coming discussions to the objectives, and we'll speak to the fundamental activities of record keeping. So the first step in record keeping, in ensuring that we have an efficient record keeping as an organization, the first step is at record creation. Where does this journey start? The journey of record keeping. It starts from record creation. So this could be in the form of a request or requisition by the user department. where you request, for instance, in the financial space, I'm requesting for a DSA or daily allowance if I'm going out of site for some activity, and then I'm able to put in that request to probably the programs manager, will approve, then streams to the finance person, will then proceed to create the necessary documentation to grant the request. And then the next step after record creation, so that would be the first step in looking at that illustration. But then again, we have diverse areas of expenditures organization. So I think I'll be switching from illustrations so that we can more or less stay balanced. So the first step is record creation. Where does it start? It can start by a small thing as an email requesting for some resources, or even a memo requesting for certain activities to be initiated. And then this goes to the next step, which is distribute, use, or file. So after creation of these records, you've done a request for your voucher, you fill in for an allowance, you filled in the request, it's gone through the approval process, it's gone to payment and been disbursed to the funds. So this information supports that allowance, and then this person will of course account for that fund once they return from the activities they were out to execute. So these records will go into filing or use or distribute. This is the active stage, the active phase of the information of the record. So once the record has been created, then it will go into use. What happens with that record? It goes to the finance team, will now come and capture that expenditure. The programs team will then evaluate what activities were undertaken by this person who was given this allowance. Then it will eventually get filed for future reference. And the feature reference at the active stage can also include use by the audit process, use, for instance, in case of compliance inquiries, use, for instance, in case of even litigation and those kind of things, in case that matters get to that point. Then the next step after use or after the active stage, we'll go to the inactive stage where we talk about storage and maintenance. So this is a stage at which you'll have either this information filed or the records filed in a cabinet, or you've scanned this information and you've saved it in a cloud space at the storage phase. So the key things to look at in both stages, I think there are aspects of security to these records, access to these records. So those are things that as an organization you should be coming up with policies, or should have policies to govern how all that is controlled. Access and also the security, who is allowed to access it, and what securities do you have in place to govern these information records that you have in place. Then the fourth stage is on retention and disposition. So this is the point at which you'll, as an organization, will be required to evaluate whether the information should be retained for future reference, or we should destroy the information. So in terms of destruction, I know there are different nationalities in attendance. So you have different laws that govern the period over which to preserve information. In Kenya, where I'm sitting, I think our statutory preservation period is 7 years. So anything above 7 years can be destroyed without legal recourse to counterparties or by counterparties, whilst the requirement is 7 years for preservation of information. What does that mean? What do we preserve? As an organization, you should be able to evaluate what information to retain and what information to destroy. So that needs to be weighed in terms of what is really, really important as an organization to retain and what do we need to destroy. So that's an assessment you need to make by reference to the content of the records and the future needs that you foresee for this kind of records you're keeping. So what are the good principles of record keeping? The first is completeness. So the information kept in any record should be sufficient, should provide enough context to the users to understand the circumstances and the events around the transaction and a discussion. So the document should be sufficient. And I think this ties up to what we spoke to about preservation. So when you're preserving document, you should ensure that you've just captured about information to make sure that it's complete, to talk to the nature of the transaction and the need for the transaction and the need for that activity to be, or for that information to be kept. In terms of accuracy, the second principle is that records should be free from errors, should be reliable, and should be trustworthy. So as trustees, I believe that we all see ourselves as trustees. We are trustees by virtue of funds given to us as organizations for activities that are of interest to the financiers that we will partner with. So it's of high importance that we keep accurate, truthful records that are free from errors. So this is one of the things that you should be on your day-to-day basis be evaluating of all the records that we generate and we keep and we use in support of expenditure or use of funds, that we should always try and ensure that they are accurate, complete, and are supporting of activities that relate to the funding that we are trying to be accountable for. The next one is on accessibility. I think this speaks to yourselves now as an organization. You have this information, you have all these records. Who do you make it available to? Is this information that is landing in the wrong hands? We're now living in the data protection age, where data is the new oil. I think any loss of information, any access to information or data that we keep in for financial or other purposes should be extremely controlled to ensure that it's only authorized users that get a chance to access it. And we use it to facilitate efficient decision making. That this data is accessible to ourselves first. And of course, there should be controls as to who has access to this data. And so in an organization, there should be those restrictions, I believe. You have that in place, that not all data, for instance, payroll data is not accessible to everyone in the organization, but only a few people who have rights and probably the right levels in the organization have access to that data. Security, the next principle, I think that is easy. I think I've touched on it in the earlier slide, where we're talking about who is authorized to access, to modify, to destroy, and how do we safeguard sensitive information. As I highlighted earlier, something like payroll, who is able to access that. So that is something that as organizations we should have at the back of our minds as we go about creating, keeping, and using data and records. Accountability, I think that principle speaks to who is responsible and who has authority over records. I know most organizations will have someone in charge of the different aspects or different types of data that is generated or different types of records that is kept. You'll have programmatic records that closely ties to financial records, probably kept by different departments. But then how do the two speak to each other? Does your programmatic record speak to your financial record? And to what extent do teams sitting in programs and teams sitting in finance have access to each other's records? That is something that should be considered as we go about generating and keeping good records. The next principle is on in the integrity of data and records. So our records should be reliable for whatever purpose that they are created for, in that someone like myself, should I come for an audit, am I going to question the data? To just reference my experience, I found myself in situations whereby you're given a document for audit purpose and you're forced to sometimes counter check with probably a supplier, check whether that supplier exists. So as you're keeping data, do you keep data that can be authenticated to that extent? Do you keep records that can be authenticated in case there's any question as to the reliability or even the authenticity? Is your data authentic? Is it genuine? Okay. Retention, I think we've spoken to that in detail. So retention can be driven by your operations or your business needs, can be based on legal requirements, and also be as a result of regulatory requirements. So these are the three main drivers of the period over which we retain data and records. So if data does not fit or does not serve the three purposes, then you're supposed to dispose of that data, because the reason for that is that data storage and retention is expensive. You'll need filing space and need room to save it. You'll probably have to pay for cloud space to store data that is not useful to yourselves as an organization. So there should be policies to assess what you retain in as data as an organization and the period over which you retain the data and records. The next principle is organization. And here we're looking at the systematic organization classification. Are you able to segregate your data so that your records for different aspects of the organization is well kept, is easily retrievable, is well managed? I spoke earlier to segregation between the financial function and probably the programs function. At what level do you organize, do you classify your data? Is it at functions level, or is it even at intra-department level? For instance, in finance, where you'll find teams dealing with internally generated expenditure, things like travel advances keep data differently from teams that are generating this data and records from possibly externally procured information and records. So that is a consideration that you can look into as organizations as we try to come up with an efficient record keeping system. Auditability, I think that speaks to my day-to-day work. So are the documents that you're keeping accessible? Are they auditable? Do you have an audit trail? And are they traceable? Are you able to delete this without leaving a trail? What happens to these records? As an auditor, I would be interested to know who has access to this. Do you have a trail in case someone was to delete or to modify records? Are they transparent? Is there someone accountable for this information? So those are good things that you need, or good attributes that you need to ensure that you enforce as you walk the journey towards a good and efficient record keeping system. I think the last item there, I think, stayed up to an earlier discussion point where we spoke to record keeping practices, that you must ensure that you adhere to the legal, regulatory, and even donor compliance purposes. So should there be specific requirements for records to be kept to comply with the legal environment where you operate in, or any regulatory requirement? For instance, you have an you have a board that oversees not-for-profit organizations or an organization that oversees the operations in the spaces where you work in. You should ensure that the records that you keep or the data that you have complies with those requirements. The next slide is on the types of records and the life cycle. I think we first speak through the types of the records, and then we'll talk to the life cycle. I think we might have touched a bit on this in our earlier discussions. On the types, I think for financial, we are looking at the primary records. We are looking at things like receipts, invoices, ledgers, bank statements, grant agreements, supplier contracts. I think those are the kind of records that we're looking at. So I think this has just been brought up so that we can tap this to your daily routines, what you see on a daily basis. These are the records that we're speaking to or we're speaking about. For operations, we're looking at program reports. We're looking at attendance registers. This now are your holding conferences, seminars, webinars even. Feed reports for teams that have been out of the office to probably monitor the activities that are being undertaken on the field. At governance level, we're looking at board minutes. These are deliberations either at board level, board committee levels, and even senior management levels minutes, where there's documentations that touch on operations of projects and even the organizations. And then we are looking at SOPs, where the standard operating procedures laid out by the organization to guard or to guide the operations of the organizations and the implementation of projects come into play. So that is also part of records that we are discussing in this session. And the last one is on compliance, where we're looking at your tax filings, your registrations with the various governmental agencies or regulatory agencies that we work with on our day-to-day basis. So those are big things like, for instance, if you working off the Kenyan regime, we're looking at things like your pay returns, your statutory returns, your health returns and all that. In terms of the life cycle, the process starts from creation. Then the next step is distribution and use, maintain and protect, where user passwords and all that access rights come into play. Disposition, and this one now we're looking at how to dispense of or get rid of the information and whether to retain it and how to retain in terms of preservation and archive. Financial records. So in this session, I think this ties up to our earlier discussion. So financial records are basically the formal documentations that speak into the income, expenditure, assets, and liabilities that form part of your financial reporting. And some of those documents or records that lead us into the income and expenditures, the balance sheets, the statement of cash flows, the fund accountability statements, all those arise from these type of source documents. So documents such as bank statements, invoices, receipts from our suppliers, tax returns, and the tax payments thereon. We're looking at timesheets for expenses incurred by employees, or basically the timesheets that account for input into the projects by employees. We're looking at budgets and forecasts. These are the budgets drawn for the projects and the forecast for spending for probably coming quarters that support part of our reporting to the donors or to the parties that we are accountable to. And then there are now the ledgers that are generated or that are built up from the various documents, the invoices, the receipts, the timesheets, the employment agreements, and all that form a part in our financial reporting process. And of course, finally, we have contracts those may be contracts with our funders, donors, contracts with our suppliers, contracts with our employees. So all these form part of our financial records, or the financial records that we keep in support of expenditure incurred or even incomes received. Then we'll be speaking to benefits of financial record keeping. Bernard, I don't know whether there are questions coming through. I think I can pause here and we take some questions before we proceed.
Okay.
Maybe Nicholas, you could
Just
finish.
finish.
You move a little bit faster so that we have a good session for Q&A.
All right, that is noted. So what are the benefits of good financial record keeping? I think the benefits that an organization will derive with a good financial record keeping system is, first, you get a good measure for financial performance or project performance in this case. So if you want to assess how the project has performed, to just give you an example from my experience, I've been to audits where you're looking at a project audit and we're having discussions with the finance team as to the burn rate. A burn rate, I think, to just give context to those of us who might not have heard the term before, is the rate at which certain budget heads have spent against the budget. So you'll have a budget of, say, 100,000 and you've only spent 20,000. And this, in terms of perspective, is we're looking at a closeout phase of a grant or a project. And you'll have questions about, why have you not used this money? What has happened? Have we achieved the objectives of the grant of the project? What would be the perspective of the donor? So if you have good financial record keeping, you make sure that you're able to monitor that. You're able to monitor how much you've spent. You're able to monitor where you need to probably reassign resources to, probably need to put in requests to donors to reallocate or to transfer resources from one budget line to the other and ensure that more is achieved out of the resources instead of having funds sitting as unspent. So I think the discussion touches to both tactical and strategic planning. So with proper records, you're able to foresee areas where you're lagging behind, and then you're able to take remedial measures. Then meeting legal and regulatory requirements, I think we've spoken to that in detail. So when you have proper records in place, you're able to make sure that you don't have any surprises arising from legal or any regulatory questions that may come your way. Then you're able to safeguard your assets. This is in the case where, for instance, if you're talking about fixed assets, you have your furniture, you have your laptops, they're well tagged, you know who is using them, you know where each asset is sitting in your organization or with who the asset is assigned. Then it leads you to achieving effective management oversight. As the head of our department, as the head of the finance function, you're able to oversight, you're able to see what is happening at different levels in more granular detail than you would if you had inefficient records. Then risk assessment, I think I'd spoken to this earlier. So in case of any risks arising from probably questions being raised by your funders that would affect even your reputation as an organization, you're able to ensure this doesn't, you're not faced with this kind of challenges with proper record keeping. Then transparency and trust with donors and other stakeholders. With proper record keeping, I think donors will be happy to work with you and not many questions will come your way in case, as opposed to when you don't have proper records in place. Then be audit ready. Yes, when you have proper records in place, your ledgers are well updated with all the invoices and transactions that have happened. You call for an audit, someone calls for an audit, you're ready on day one or on short notice. Preserve knowledge, I think spoke to this earlier. This is now where you're able to easily manage transitions from staff perspective, as well as from even system migration process. With proper records, you're able to manage all those transitions in an organization. So examples of supporting documents for project expenditure, project expenses. I think we've summarized this into two. First for payroll, and the next column on the right there is for non-payroll. These are basically procured or externally sourced expenditure. For payroll, we're looking at timesheets, where you've put in a system in place that enables you to track the time spent by specific staff assigned to a project, and you're able to tie up this to the guidelines set up by the donors in the grant agreements. Then you have contracts with your employees. So those also form part of record keeping and part of your financial reporting process. I think the biggest gap I've seen in that bit is in relation to reviews of contracts, where you've given your staff pay raises, pay adjustments, more benefits have been given, or even benefits withdrawn, and the same has not been amended, or there are no addendum to those changes in terms and conditions of employment. Then there's proof of payment, where when, for instance, I come for an audit, I would want to see a proof of payment that, yes, Nicholas is the employee, is the project accountant. We wrote him his salary. There's a check. There's a evidence of, there's a proof of payment. There's a wire element. There's an RTGS. There's a bank statement supporting the expenditure or the payout. Then allocations and allocations calculations. So where, for instance, you're working with, and I tie up to the next point, and that is calculation sheets and formulas. So where there are allocation of benefits, or where one employee is in charge of implementing a number of projects and the salary has to be distributed across several projects, there should be a worksheet or some workings that support that allocation. That is very critical, where, for instance, you're looking at an accountant supporting 10 or so different projects. There should be adequate and reliable records supporting how the allocation of the salary across the different projects has been done. Then policy documentation for standard rates, where there are standard rates that are in use, like, say, a travel allowance of 4,000 shillings per person, that should be in place. Or we have a per diem policy for 4,000 shillings, or out of town allowance of 5,000 shillings for in country and 10,000 shillings for out country. There should be adequate policies or policies in place that speak to that. And of course, there will be additional documents depending on your jurisdiction or your area of operation that you might have in place. For supporting documents for non-payroll or externally sourced expenses, invoices, receipts, proof of payment, the approval processes, I think all that needs to be put in place. So those are examples of records that we need to have in place. And of course, evidence of review of coding. So if you're posting expenditure that relates to probably stationery, it should be evidence that this was stationery for this project and it happened in this period and it's been properly approved, requisitioned, and put into the right use. Contracts and agreements and the amendments thereon, that should also be kept well. I think I've found myself in places where the contract says one number and the invoices are a different number and there's no evidence of amendment. So those are the kind of issues that will end up as exceptions being reported to the donors, and that of course leads to questioned costs and a lot of friction with the donors and funders. Purchase orders, evidence of delivery of goods and services. So those are the information you need to have in place. And the other one I would add there will be things like distribution lists, where, for instance, you've been funded to distribute products or goods to the final consumers or the participants in the project, you should at least maintain a list of the beneficiaries of the participants to that particular project. Basically a list of all you acquired, like say 10 mosquito nets, assuming now we're looking at a malaria kind of setup, and one of your activities was to distribute, say, 1,000 mosquito nets. You should be having a distribution list showing that the 1,000 mosquito nets went to Nicholas, Kevin, Bernard, and so and so. So common financial record keeping challenges. The first one, I think we look at the bookkeeping knowledge. I think that plays a big role in making most organizations not have proper records in place. Storage space is a challenge. I think space equates to a cost, whether you keeping the records in space in a cloud or in a cabinet, you have to pay rent for that additional space. Lack of standard processes, where most organizations are doing have their own different practices. It would be important, I think, if you could benchmark or reference to other organizations and come up with a similar or standard way of record keeping if you engaged in similar or nearly similar activities. Then there's over-reliance in manual and outdated systems, where you're not changing with times. You're doing manual record keeping, manual data, manual filing or maintenance of ledgers and listings. That is something that, of course, would need capacity building. Same as the first one, the knowledge bit. Then data growth, where you've grown so fast that as an organization, you're not able to cope up with the growth. That is a challenge that we've seen in many organizations. Then limited integration across systems, where you have financial systems and you have program systems, and the two systems don't speak to each other whilst they are interdependent, ideally. Time constraints and multitasking. I think we're living in very fast-paced times, so you'll find yourself in a place where there's so much to be done and little time to execute. And of course, you're multitasking. You're sitting in meetings for programs, you're sitting in meetings for procurement, you're sitting in meetings for different things, and you're also supposed to ensure proper record keeping. And then, of course, emphasis on record keeping. This can get lost because it's assumed that we're likely to lose track of this, because everyone in the organization assumes it's a very manual and easy to do thing. So if that is not emphasized, I think that leads to very poor or weak record keeping processes and systems in place. So what are the pain points that we've seen? Inability to locate records, where you're not able to locate where you've kept your records. Insecure records, where your records are easily accessible, can be accessed by persons who are not authorized to access them. Records retention. Most organizations are struggling in this bit: what to retain, what to destroy, how to schedule the process of retention and destruction. And then evolving regulatory environments. I think I've spoken to the emerging trends in terms of data protection and all that. How does that then feed into what records we keep? How much records do we keep? And where do we keep it? And how do you control access and use of these information and records? Then a record keeping system, ensuring that you have a consistent process of keeping records so that you don't struggle with the first point I spoke to, the inability to locate the records. Then managing both physical and digital records, you'll find instances where organizations have a policy to keep a copy of all physical documents in a digital form. So you'll find cases where we have a physical document, but the digital is missing, or vice versa. So those are the pain points that have been noted as pain points in record keeping. So what are the consequences of poor or inefficient record keeping? I think there are four phases we will speak through. And the first one is the financial risks. So that touches to the risk of fraud, where we're not able to support our expenditure lines, and that obviously is picked up as a fraud concern by any donor, any funder. Decision making is affected or inhibited by poor records. Securing funding becomes a challenge when you don't have proper systems, proper records in place. No donor would want to touch you. Inaccurate financial reporting, you'll find a lot of errors in financial reporting where you report in more expenditure than you incurred or less expenditure than you incurred, hence your records don't really speak to your financial reporting and don't speak to the realities of what you've done on a project or as an organization. And the last one, limited access to funding, that ties up to the difficulty in securing funding. So without proper financial records, then there's a challenge for you to be able to access funding opportunities. Legal and compliance, I think is spoken to that. Legal disputes, tax penalties, regulatory non-compliance, donor challenges coming from the donor side asking for refunds and all that. Operational inefficiencies, wastage of time and reduced productivity. You'll find yourself, you have an audit and you spend the whole day trying to retrieve supporting documents that have been requested by your auditors. Missed opportunities. You missed out opportunities on funding calls. There's a call for fundraising calls by donors you cannot respond to as you're trying to put together your records to be able to tick all the boxes or to tick all the requirements that have been listed by the donor. Reputational damage, I think that's a big one for most organizations. I think in the audit space, we have organizations in the market that are flagged as no-go zones by auditors or the more credible auditors. So that reputational damage comes with poor record keeping. Cost inefficiencies, I think there's a cost attached to every record or data that you keep, be it digital or physical. There's a rent to pay, there's a subscription for cloud space to pay. Data information systems risks, so incomplete data, accidental deletions, data breach, the data or information landing in the wrong hands, all that comes into play. And I think with that, you can imagine what can happen in case of any data breach and personal data leaks, and of course the legal disputes or legal measures that can be enforced. So what are the common audit findings in terms of record keeping? For non-payroll expenditure, of course, we've noted cases of non-compliance with procurement policies, where your policies state that you're supposed to engage at least or get quotations from at least 3 suppliers before you award. We've seen cases of single sourcing and the same not being justified as required by policies in some cases. Inadequate supporting documents, you'll find that yes, you have an invoice, but there's no evidence of what the work was done. You've gone and you've engaged a consultant to deliver on an activity, but you don't have any report from the consultant. Non-compliance with budgets, that happens when you have poor records where you don't even know how much you spent, so you don't even have proper reference to the budgets that have been given by the donor. And that, of course, leads to question costs and demands from donors for refunds. Then you have payroll expenditure. We have issues with allocation of costs. I think I spoke to this earlier, where you have cases of employees working or assisting in implementation of multiple projects, and the same not being evidenced by a proper allocation of the cost. And then there are cases of staff who are not provided for in the budget and in the agreement in to be used or to be for support to support the project. So you're not supposed to have your CEO in the budget, or the budget doesn't speak about an allowance on allocation for the CEO, but you find organization charging a cost for the CEO. So that is a key issue we've come across. Non-compliance with thresholds that in the budget. Yes, that is a big problem. I think I spoke to it on non-payroll. That's also sits in payroll, where you find there have been salary reviews, salary increments, and you end up charging more costs than you're supposed to charge. You breach the thresholds given for under overspent by the budget, but you don't seek donor approvals. Failure to comply with the statutory requirements. You're supposed to be submitting some statutory returns, be it the PS1s, the SHIF in Kenya, whatever statutory requirements you have in your area of jurisdiction, and that has not been complied with, and that becomes an audit finding that gets reported. For travel and DSA costs, I think we've seen a lot of challenges with supporting documentations for this, where the only support you'll get is the request for the fund, and there's no support of how the fund was spent. Activity reports, you've sent out teams to field work to carry out activities, but there's no record that ties up whatever they were out doing to the budget lines or the spent authorized by the donor. Inadequate supporting documents, things like tickets, missing attendance registers, where teams are carrying out activities and the participants in attendance, you'll find there's an allowance paid out to the participants, for instance, but you don't have a register for those participants. Or we have a conference facility and you don't have supporting documents or an attendance register for that conference. The differences or inconsistencies in the records, the next point, where you're looking at cases of now the attendance registers number, still like 10 people are not deserving attended, but the invoice is saying 100 people attended. Those kind of issues we've come across. And of course, compliance with the budgetary allocations. Then what are the important steps to effective record keeping? First is who is going to manage the process and the records. You need to identify that person to champion and lead that in the organization. The next one is to organize the existing information and records, ensuring that you eliminate whatever is unnecessary. And then ensure that you deliver correct, consistent, and comprehensive information, just about information, enough information to support the need for that record. Users can easily locate and retrieve data. So that should be ensured, of course. You tie that up to security, who can access the data, authorization, who is authorized to access the data. And then on creation and retention, ensure that you create the data that you need and destroy what else. You keep the data that you need, and whatever you don't need, you destroy. Safe disposal of useless or expired documents. We should have a system of evaluating what is important. As I mentioned earlier, storage of data is expensive, and hence only the right amount of data and the most important and critical data should be kept. Significant data should be, or basically safeguard your data or most critical data through ensuring that you have a backup in place or disaster recovery mechanism in place. Ensure that you have, in case something goes wrong with your data in cloud, do you have a physical copy? In case there's a disaster, say a fire in your office premises and all the physical data is destroyed, do you have a mirror copy saved in cloud? Those kind of considerations should be put in place. Then, of course, ensure that team members are trained on new record keeping measures and plans, and monitoring records management programs, and making sure that it's up to date. And to add on to that is to ensure that your policies are updated to make sure that the most up-to-date or emerging trends in the industry have been incorporated in your record keeping. So what are some of the best practices that we've seen? First is to ensure that we maintain both digital and physical data and records, ensuring that all the records are up to date. Any changes have been effected, any updates, any amendments, addendums are tied up to all the records and data that we keep. Ensuring that we have an archive of documents as soon as they are generated and they are available to us. So that makes sure that the information doesn't, the risk of it landing into the wrong hands is reduced. Then, of course, the next one is an important one, ensuring that you create a clear separation between personal, organizational, and project records, so that I think any mix-up there could lead into a lot of problems. Ensuring that you have standard formats and templates for record keeping. Naming conventions, ensure that you have an easy way to name, remember, and retrieve your data. An illustration there has been given. For instance, you can use years, months, dates, and another naming convention that you prefer. Of course, security for your data, financial data, or any other data is key. Ensure that all the data has been safeguarded and access is only limited to authorized users. Retention policies, as I mentioned earlier, the policy in Kenya is to retain data for up to 7 years. That is the statutory requirement. I think as an organization, you might have other considerations or so that is the end of my session. I think, Bernard, we open to discuss any questions that have been raised by the participants.
Thank you so much, Nicholas. Let's give Nicholas virtual claps. Okay, as we are doing that, we've seen so many questions being raised on the Q&A forum, and I'm going to pick a few because we don't have much time. So I'm going to pick maybe 2 or 3 questions to begin with, and then maybe I can give one person to be able to also ask one question. Maybe you can raise up your hand and then I'm going to select one person. So the first question, can you give us legal and regulatory example in any country how it works for record retention? And then I can tie it with the second one. My question is on retention period, where the statutory local requirement period for retention is lower than 7 years, you mentioned, and the organization chooses to follow the local regulation. What is the implication? So maybe you can pick those 2, Nicholas.
Yeah,
and
thank
Joseph,
you.
in case you want to add on.
Yeah, thank you. I think I'll go and then Joseph will come in. I think in terms of examples of legal would be, I think I'd tie it up to the tax regime we have in Kenya. In Kenya, tax audits go, or there's a requirement for tax audits should go back up to 5 years. So if you're operating in Kenya, if the tax authorities come down for a tax audit, they would ask for records going back 5 years. That is what they are required to review. They're not supposed to go beyond the 5 years. Whilst there's a legislation in place that governs retention of information, I think those of us who are in Kenya and have been around for long enough, I think that came out of the Golden Bag scandal, where, without going into the details, the legislation came out of that, where organizations were destroying data in the first or second year. So for any matter that goes to court, the court can demand for you to produce records going back up to 7 years. If a matter goes beyond 7 years, the court will, of course, close that matter as not really as being closed out by the legal requirement for record keeping. In terms of compliance, I think that I would tie that up to the local regulatory environment. For those of us who are not Kenyans, I think in Kenya we have the NGO Coordination Board, and we have organizations that are regulated by that board. So that board does carry out visits or compliance visits. They are likely to come and review these records that you're keeping. They're allowed to come and review, or the law allows them to come and review both programmatic and financial data. So for that, they follow the legal back period, or the statutory back period of 7 years as well, same as the court process. So if in case something happens and the board responsible for ensuring compliance or regulatory board comes for review, they'll ask for records going back up to 7 years. I don't know whether I've touched on the questions or I've responded. Probably the person who raised the questions can unmute and.
Okay.
The only thing
Joseph.
I'll add very quickly is that we sign grant agreements, and they will have a clause on record retention. If the record retention being asked by a funder is higher than the statutory requirement in your country, you can raise that with the funder. You know, many people think you cannot negotiate a grant agreement, but if you go to the funder and you tell them here, records are supposed to be kept for 4 years, and it will be very hard for us to keep them for 5 years. Most of the time they will accept. But then if they don't accept, then you ensure that you keep the records for that particular project for the stipulated time. Or the alternative is you say you not had that grant, because we should not accept all the grants we receive. There are some that have terms that are very restrictive, and we can always say no. Over.
Okay, thank you so much, Joseph and Nicholas, for the good response. So another question that is really cropping up is about the timesheets. So maybe we can handle that. So the first question is, how do you implement timesheets effectively? Then there is another one, how do you address timesheet issue for public universities where those timesheets per se are not filled, but work performance is assessed by job, course, research, work, and community performance? So over to you, Nicholas and Joseph.
Yeah, I think for timesheets, I think there are applications or there are applications that can be put in place to do that. Even Excel systems you can design an Excel sheet to track that time, but then that requires a lot of discipline. For large organizations, there are service providers who can grant you access to a timesheet portal which can be used to track the time by the staff assigned to projects, and be able to, where they can be logging in the time they've put in executing project activities. In the case of, so those solutions can be followed. For the Excel one is a bit manual and requires a lot of discipline. And ideally, a timesheet should be completed every week. Anything beyond a week, you'll find yourself forgetting what activities you are doing or what tasks were being undertaken at various times of the week or even month, in case you're completing it at the end of the month. In the case of a university setup where you're carrying out research, my question, I'd throw a question back to you. Is this the only thing you are doing for this activity? Or is it the only activity that you're implementing as a university? I'm looking at a case where someone is carrying out research at probably the doctoral level. You're going for your PhD level and you're carrying out a research. So are you able to come up with a proper time time allocation that tracks what time you are involved or engaged in your research and what time you are probably engaged in your work or your other activities. That should be the considerations you have. And then, of course, as you do that, you should be looking at the time input. And to tie that up to the provisions, of course, in the grant agreement. What does the grant agreement say in terms of tracking effort into the activities? If you're deployed at 100% for the grant, then it means you're not supposed to be participating in other activities, should be 100% working on that particular grant. So in that case, 100% of your time should be going to that grant and your timesheet should reflect the same. But where you're working on a grant at say 15% of your time going into it, as in your effort being 15%, I think in that case, you should be able to demonstrate where the rest or the 85% of your effort or of your day is going to. I'm not sure, Bernard, whether I've addressed that.
Okay,
Joseph,
maybe Joseph.
coming.
I think I would just add something that is a little bit unique for universities. Those working in public universities receive salaries that are lower than is paid elsewhere for people doing similar work. Let's say another researcher somewhere else. So you can have a professor getting $500, and if you now would use timesheet and say they are 50%, so you give them $250, which is not adequate compensation for their work. So what the universities do is to have a salary scale for research work. And they might say a professor will be paid $3,000 if they're working full-time in research. And so that now sets the basis of the amount that they will be paid. Now, in terms, and that is a written document, and that is communicated across the university. So now, in terms of now being able to assess that money, then the university could have a deliverable-based system that you need to supervise the field work, you need to do X, Y, Z. And once you have done this, that qualifies you for 50% of the pay. So in other words, even if you don't have a real timesheet and you have a deliverable-based system that you can demonstrate, then somebody will see that at this level, somebody was to get 50%. So that 50% is equivalent to 50% ROE. So there are different ways of approaching this. Over.
Okay, thank you so much, Joseph. Thank you so much, Nicholas. Our time is far much spent, and we have so many questions that have been asked. A number have been answered
Bernard,
the chat.
most of them
Yes.
have been answered. Most of them have been answered. Yeah.
Yes. So yeah, most of them have been answered, and the ones that might not have been answered, we can still continue the conversation within our community of practice. I have put a link there. Yeah, kindly join the community of practice, and then we'll have more insights on the questions that have been answered and even the ones that have not been answered. So with that, I'll want to thank all of you for attending this webinar. We still have others. We are going to communicate to you through email on the next webinar so that you can plan in advance and mark your calendars. And then we'll also share opportunities that we have at APHRC so that you can also join us. So I'll give Joseph 1 minute to give parting shot and also to release us. Welcome, Joseph.
Thank you, Bernard, and thank you, Nicholas, for a very good presentation, very detailed, and indeed one that talks to the issues that we see every other time when there is an audit. And for those of us who have been here, I'm sure you have learned a lot. We are still available to continue to engage with you. There are those questions that are not answered. We will look at the chat and the Q&A, and we'll be able to get back to you with answers. You can also join the community of practice, in which case you'll be able even to engage with other people in this community of practice. Otherwise, we are doing these webinars once a month. So this is the one for July. There will be another one for August, and we'll let you know about it. Otherwise, thank you very much for your participation, and I wish you a good afternoon and good evening. Bye for now.